Hello, everyone. Welcome back to the How to Trade Trading Room. This is the Switch Markets live webinar. I'm Shane Vernier, and today we're going to talk about Bollinger Bands and how exactly you can get them set up, get them to work for you, and how you can trade them. We're going to go through the background of Bollinger Bands, and then I'm going to give you two strategies that I've found over the years to be very helpful. I think that there's a lot of strategies out there that a lot of folks have tried, and the Bollinger Band strategies are approaches to the markets that I personally believe in. I use Bollinger Bands, not necessarily to trade exclusively, but I do, in fact, look at the Bollinger Bands every single time I look at a pricing chart, and they tell me a lot about what exactly the market's doing and how exactly I can take care of it. And what I mean by take care of it's take care of business and make sure that we get in on profitable trades and we don't necessarily get caught in the many traps the market gives us. I mean, let's be honest, the market is a giant trap. It's out there to trap as many people as it possibly can. And the idea behind these streams and these live streams and answering the questions and interacting with all the traders out there that I possibly can, the idea is simple: to make us all collectively as astute as we can possibly be. And what that means is as good as we can possibly be. We know that if we're good and we're savvy traders, we're going to make money. It's just a matter of time. But we have to be able to stay out of the traps that the market presents to us. And one of the ways that we can do that is we can use technical indicators really to fall back and build nice strategies, fundamentally sound strategies that are airtight, strategies that are going to keep us in the game for the long haul. I'm going to give you 2 today for Bollinger Bands. I'm going to show you where to find the videos where you can watch and see exactly if you're interested in maybe trading bands. They're a very popular way to trade. They're probably one of the most popular ways out there. A lot of folks love Bollinger Bands. So I'm going to show you exactly how to do that. We had some questions from a little bit earlier that I'm in fact going to answer here before we dive into our John Bollinger's lifetime as masterwork. But I've been looking at bands for a long time. I'm not as good as Bollinger, but these were one of the first indicators that I was ever taught to use. And it's just basically a pricing envelope. We're going to define it. We're going to show you all about it. Tina, good to see you. Tina, welcome. Let me see. Tara, let me see. Small Yeezy. Good to see you. Small Yeezy. Yes, sir. Teach me the way of the Bollinger Band. All right, I'm going to do my best, guys. Let's see. Tuku, good to see you. Tuku. We had a quick question, though, from Andrea Gorwal. Wanted me to take a look at the Euro Australian dollar just very quickly. Fantastic work there, Andrea. You spotted just a great support zone. We had a nice support zone, 62% on the weekly, and we've also got that 13-week EMA really creeping up right there at 178.34. 62% up there at 178.59. So that 178.50 zone could be key for the Euro Aussie. We're definitely coming off in a big way, and that's not a bad thing. But really, guys, another quiet session. This should be a session that you're not necessarily on the sidelines for. I know a lot of you have some active trades going, and that's great. Just remember, as we get closer to that Labor Day holiday, a little bit later this week, we're expecting some action on core PCE, but we're not really believing that we're going to see the best trading week ever. Why? Because we're sort of winding up the summer. Big weekend here in the United States. Monday is going to be a holiday, Labor Day. Markets are closed after Labor Day. That's when we really need to get serious. That's when we'll start looking for that volatility and that action consistently. I'm going to set the table for you tomorrow. We got a live stream coming back on all of our platforms. Trump, Powell, and U.S. GDP. It's time to trade. We're going to get you prepped and ready to go. There's going to be a lot going on next week and the week after and the week after, and we've got to be prepared for that volatility. Right now, very slow, very, very slow. A lot of it's uncertainty. A lot of it's just because it's the time of the year. That's for sure. Gordon Williams, hello, in on the green in 4 trades. Absolutely, Gordon. I know we've got some successful trades out there. I see a few traders that have been going back and forth with me today. A couple of those trades are working out very, very well. So it's always great to hear you guys making money. I'm a big fan of money. I'm not greedy, but when it comes to trading, we're greedy. The biggest thing we can say as traders is we don't give anything away. Learn from your mistakes. Be able to really cash in and capitalize and really get after the markets when you need to. Next week's always the best weekend. In my opinion, that's exactly what we're going to see. All right, everybody, let's get on with it. We got a lot to cover as far as our Bollinger Bands go. I think that we're going to have an opportunity here potentially to trade, and maybe even a live trade here on the BBs. So, all right, if you guys want to trade switch markets, bring your ambition into focus, a regulated broker, zero precision account, thousands and thousands of global markets. There's CFDs on almost anything. So if you're looking for a broker, check out Switch. And if you want to trade some of these strategies, feel free to open a demo account over there at Switch as well. That's the way that I would do it. Okay, Bollinger Bands. Over on the Forex Signals TV channel, we've got a couple of videos out there that I cut a while ago, and these were a while ago. One of us is an Academy video called Master Bollinger Bands, Complete Tutorial for Traders. That's a long-form video, about 20 minutes long. I cover everything you really need to know about bullies in that video. The other one is one of the first YouTube videos that I ever made, and it was Learn 2 Bollinger Band Strategies in 10 minutes. It's definitely one of those that you want to capitalize on. That's really a big deal and one that you want to be get in front of that one. I've had some traders that have had a lot of success trading breakouts, trend trading and breakouts using one of those strategies. I'm going to show them both to you today that are in that video. But if you're interested, that's over on Forex Signals TV, and we'll be sure to make a, I don't know, I would make a showing over there and make sure that you want to broaden your horizons with some Bollinger Bands. That's a good place to start. All right, Bollinger Bands. The man of the hour is John Bollinger. Now, Bollinger is just a historic market technician. He came up with this methodology like most of these tools that we use. These indicators, I get a lot. Shane, what about this indicator? What about that indicator? A couple of things. Nothing's new under the sun. All right? everything's been, I mean, not everything's been done. AI has taken us to places we haven't done yet. But what I'm saying is when it comes to indicators, they're all old. They're all old. And I don't necessarily look at that as a bad thing. I think the older indicators that are still around prove that they work. And the truth is that all of them have a function. All of them work. Now, there is no holy grail. All right, Bollinger Bands are not a holy grail, but what they can be used for is they can be used to trade in a structured fashion, and that should be your goal each and every time you go to the market. So there he is, John Bollinger. I don't know him. I've never met the guy. I've never talked to him or anything like that, but his life's work is the indicator that we're going to look at. Is he a good trader? I don't know. He's a good technician. And remember, switch is there if you need to. It's all right. So let's go ahead and get on with the program here. Let's go ahead and what are Bollinger Bands? Let's define it. Let's talk about the calculation, and then let's get on to our strategies. That's really what's important here. All right, so what are Bollinger Bands? Bollinger Bands are a pricing envelope that measure the pricing volatility. Bollinger Bands define upper and lower price range levels with an upper trend line and a lower trend line. So what do? They measure elasticity, identify market state, and define trading ranges. Basically, they're an envelope for price. That's it. They are a representation of the relative volatility present in the market. You'll see exactly what I mean when I show you on the charts. That's it. Don't get confused. Don't let all this stuff confuse you. A lot of folks really just get bogged down in the minutia. History, 1983 by John Bollinger. This was supposed to be a revolutionary way to trade. If you actually go through Bollinger's work, there are some strategies based on his Bollinger Bands, but he also says specifically, should you trade Bollinger Bands exclusively? And he says no. You don't just trade Bollinger Bands. You have to trade it within a framework. It means that the numbers themselves, the Bollinger Bands themselves, aren't the holy grail. Remember that. You've got to know how to interpret what they're telling you and then incorporate strategies that really reflect and help you capitalize on what's happening in the market. That's all they're for. That's it. They're there to help you interpret price action and know what the market's doing. All right. Bollinger, once again, I mean, they're all old, guys. RSI is old. All of it's old. Now, there's some deep math. Bollinger Band formula, you can see that basically it's just a bunch of moving averages. That's the easy way. I mean, believe me, there's market technicians out there and economists that are laughing at me right now going, really, Shane? They're just a bunch of moving averages. That's all they are. All you're trying to do is you've got a relative moving average on the top, the bottom, and the middle. You're trying to create a band that shows us how price is moving and if, in fact, the volatility that we see right now is, number one, hot, and number two, the highs and the lows that we see now in our range, yeah, they're high and low, but are they high and low relative to past highs and lows? That's what Bollinger Bands are all about. The beauty of this math is we don't have to do it. Everything's automated. All we're going to do is we're going to add them to our charts. It's going to do it automatically for us. The beauty of this thing is it's a public domain indicator. That means that it's free on all your platforms. I'm going to show you how to get it up and going on TradingView and MT5. It's relatively easy. Now, the inputs, we can put it on any chart on any time frame. The length is the number of periods. That's big. I'm going to show you my own secret sauce with Bollinger Bands, but you can use the defaults too. Remember, on that Piranha strategy, we use a real short periodicity of 12. So there's nothing wrong with that. There's absolutely nothing wrong with that. The length is the number of periods. That's key. You're going to have a pretty good idea of what that means. I'm going to show you in a minute. Source, open, high, low, close, median. Source is big. Source is just like your moving average. How are we going to calculate the Bollinger Bands? What price points are we going to use? Is it going to be the open of our period, the high, the low, the close of the median? I'm going to show you what I use, and I'm going to tell you why I use it. And then the standard deviation. That's the degree of elasticity. If you have any background in statistics, then you're very familiar with standard deviations. To be honest, I wasn't very good in statistics in college. I wasn't. At university, I was not a statistical wizard. I was a baseball player, but I liked statistics, and we use statistics a lot in trading. I personally stick to the easiest things I can think of when it comes to stats. That's usually just arithmetic. That's why I love key levels so much. But the standard deviation is going to give you an idea of how far those bands are away from a mean value according to a deviation. So just how far of an outlier are they? Well, we're going to assign that. Do we want 2.0, 1.9, 2.2? Everybody uses something different. I'm going to show you exactly how to set that up as well. So the automated functionality is great. What do they tell us? I already went all over this, but this is easy, guys. They're visual, easy. I want everybody to look at Bollinger Bands and go, this is really easy, because it is. All they tell us is how much volatility and elasticity is in the market. When they are wide apart, when they're far apart, all right, you've got a lot of action in there. You got a lot of volatility. When the bands are close together, When the bands are close together, that means the market is tight, it is in rotation, it is sideways price action. Usually the ranges on our price bars are small, and there isn't much run directionally in the market. Now, when they get slope, when the Bollinger Bands either slope really steep up or down, that means we're trending. Means we're trending. Means there's a lot of elasticity in there. And when price is sort of hugging an upper or lower Bollinger Band or breaking out of those Bollinger Bands, that means that we're beginning to trend. That's very key. And remember, when those bands are parallel, even if they're wide and they're parallel, that means the market is just rotating. It's just you're pinging off of one and going back to the other. Very, very sluggish, slow, non-directional market. That's it. That's it. Now, can you trade it right now? No. We're going to have to show you how, but we're going to. All right, it's a visual indicator. Remember, Bollinger Bands are visual. It gets us up and running fast. We look at it immediately. We know exactly what's going on in the market. That's why I use them. Trend versus rotation versus breakout. We're going to cover two strategies in this video. We're going to give you a trend and a breakout strategy. That's going to help. It's not a true trend. It's more of a breakout strategy, but it's definitely a trend following strategy. And then the second one we're going to give you is a rotational or a reversion to the mean strategy. All right? They both can make you money. You got to be smart. I was going to introduce the concept of a coastline trade today. Maybe I'll touch on it towards the end, but that's probably needs to be its own video. It needs to be its own webinar. And then a breakout, flat to directional, tight to broken. We're going to show you how to do that as well. All right, guys, let's go ahead and get started. Let's go ahead and rev this up on our pricing charts. And when it comes to TradingView, this is relatively easy. You just go up here to indicators, give indicators a click, and then you're going to go ahead and take your drop down what is that menu? You're going to click on Bollinger Bands, and what's going to happen there, that's just going to go ahead and populate what you have going here. Now, when you take a look at what I have, I'm going to show you my default settings. This is my secret sauce. Remember, this is a public domain indicator, but I will show you exactly how I use Bollinger Bands. You don't have to use this. You can just use the default settings. I'm going to show you that in a second on MT5. Inputs, your length. That's going to be the number of price bars you want to use to get your Bollinger Band calculation. Your basis moving average type. Now, this is key. When you use Bollinger Bands, they're a collection of moving averages. The bands themselves are a pricing envelope based on a moving average. Now, you can choose whatever kind of moving average you want. If you want an SMA, an EMA, a smooth moving average, if you want a VWMA, whatever those are, weighted moving average and a variable weighted moving average, I believe, you can use any of those you want. I go with EMAs. You'll notice on our channels, How to Trade Calm YouTube, we talk a lot about exponential moving averages. The reason why, they put more emphasis on the most recent pricing data. That's what we want. Most recent pricing data, more emphasis on that. What's called a weighted moving average. So what that is that sort of weights the current price data as opposed to past price data. However, you can use a simple moving average if you just want a real basic type of a indicator. But look you can see how it moves. SMA, EMA. So it all has an impact on your final value. The source. This is where I get into hot debates with almost everybody I know. They go, Shane, I don't understand why you're using this. Why are you using that? Well, you can build your moving averages or your Bollinger Bands on anything. The open, the high, the low, and the close. You can build it on any of those price points. I go with the high-low divided by 2 or that median value. I want to know that middle value. Now, why is that? Well, I want my Bollinger Bands to be based on the middle of those price bars. I don't want to get caught up with the highs and the lows. I'm not interested in the extremes. I'm not interested where it opens. I'm not interested where it closes. I want to know the dead center of those price bars because that's going to give me my baseline value for my moving averages, which are going to be my Bollinger Bands, my envelope. I want my envelope based on price going through the middle of those price bars. I don't want to get thrown off by an extreme high or an extreme low. I want a baseline value. And if you're an American football fan, if you've ever gone to make a tackle, I remember back when I played high school football, I played college baseball, but when we went to make tackles, you would always watch the ball carrier's belt. You would watch the belt because the belt wouldn't fake you out. The head, fake you out. You watch the feet, you get really confused. But the belt, the midsection, you can't shake me if I'm watching your belt. That's what I want out of my Bollinger Bands with regards to price. I want to look at the center of those price bars. I don't want to be thrown off by maybe a freak high or a freak low, and I don't care about the opens or the closes either. Chart patterns, that's different. Bullies, I go with the mid. I believe that's very, very important. So there you go. There's how you add your Bollinger Bands on TradingView. Let's go on over to MT5, and then I'll go ahead and look at the live chat. I'm way behind on that, guys. I'm sorry, but I'll answer any questions that you may have thus far. You're going to go up there to Insert. Drop down, go to indicators, go to trend, and you're going to go right there to Bollinger Bands. Give Bollinger Bands a click, and you'll see right here, this is still set up from our Piranha. 12 deviations are 2.0. I got to go to standard deviation here in just a second. I forgot that. We're going to go right here to period. Let's just go ahead and let's go to 20. Standard deviation, let's leave that at 2, and we can go ahead and apply that to the close, or we can go with the median price. Let's go to the median price. Now, if we're going to set these up how I would do it, I would go with a period of 24. Now, the standard deviation, very important that we don't ignore the standard deviation. The standard deviation is going to be a function of how elastic these bands are. So what I mean by that is if we go with a real tight standard deviation, that's going to give us one representation of price action. If we go with a real loose standard deviation, that's going to give us another. We're going to do this on TradingView so you can see it. But my deviations, don't tell anybody, 1.9. Shane, why 1.9? Because that's what I was taught. That's what I was taught. I've been working with 1.9 for 15 years. Feel free to use whatever deviations you'd like, though. Just do a little back testing first. So right there, that's how you put those up on your MT5 platform. Now, if we go back over to TradingView, we go over here. Let's go to our settings. What happens when we go ahead and we mess with our standard deviation? See, I've done this so many times, I didn't even look at my standard dev. Take a look at what happens with our bands. Let's say we adjust it. I know some traders, they like a 2.3. All right, 2.3. That does one thing. How about a 1.5? It's going to do another thing. Let's go 1.5. What happens? Tightens it up. All right? The smaller the deviation, the tighter your Bollinger Bands are going to be. So conversely, let's say you go with a 2.5 deviations. Think about what that's going to do to your Bollinger Bands. The higher that deviation, the wider your bands are going to be. The less reactive your bands are going to be. The tighter, the smaller the deviation. You're going to have real tight bands, so price is always going to look like it's breaking out. You need to find a great, really a strong deviation. I recommend 2.0 or 1.9. I'm partial to 1.9. That's exactly where I would start. Beautiful. See how that mirrors it? Very, very tight. Very nice, very elegant. All right, guys, I got way behind on the live chat, so let me see. I'm still laughing. Let's see. Droopy, still laughing at the bowling shoe ugly comment from yesterday. That's an old wrestling saying from Jim Ross. I remember he used to say that during wrestling matches back in the 90s. We were wrestling fans. My baseball team, we'd get together on Monday nights and watch the Monday Night Wars with WWF and WCW. But it was always bowling shoe ugly. That move was bowling shoe ugly. I remember that. Funny what sticks with you over time. So I'm glad you enjoyed that, Droopy. Thanks. All right. So we got our Bollinger Bands set up. The real question is now, how do we trade them? Well, there's a couple of ways that we can trade them. We're going to go ahead and we're going to go right down to intraday time frame so we have an opportunity to maybe get a trade or two. Let's go to our trading panel and open up just paper trading. Remember, guys, there's certain regulations. There was a time when I was trading real money here, and it wasn't necessarily the best thing in the world. But I enjoyed it. I enjoyed trading real money, but was frowned upon, I guess you could say. Let's go ahead and grab a futures contract today. Let's go, maybe not with the E-mini. Yeah, E-mini S&P 500 futures, 5-minute chart. All right, we're going to go ahead and look at how to interpret this in just a second. But I'm going to run you through 2 strategies for trading these things. The first strategy is going to be the trend of the breakout strategy. So let's go ahead and go with it. This is in the video, covered in that first video that I showed you over on Forex Signals TV. The Bollinger Band strategy number 1 is trend. I misnamed it. I was too young. I should have really thought about this. It's more of a breakout strategy, but the idea is that you're going to get in on a directional move in price. Now, you can use it on any time frame, on any product. It works best on liquid volatile markets, 100%. Now, you need to be looking for robust risk versus rewards on this first strategy. And the reason why is because we're trying to catch a breakout and a mover and a shaker. And that typically is high risk. You can easily get faked out using Bollinger Bands just as your only indicator, trying to get into the market there. That's fine and dandy. But we're looking to get breakouts and we're looking to get swift moves. So 1 to 3, 1 to 4, 1 to 5. I would say all those are acceptable. I'm a 1-to-1 trader, so this isn't my favorite thing to do, but it really is sort of a true day trading strategy, potentially even on short time frames. The real question is can you make it successful? And that's going to be really predicated upon your ability to read market state and identify when you should be doing this. And I'm going to give you a few hints here in a second. So that's it. That's the first trend trading. And this is what it looks like. Relatively straightforward. You've got sort of a parallel Bollinger Bands, and then you get that real wide elasticity. The bands start to open up, and then you get a bar close outside of the band. That right there would have been your entry, and your idea here is you want to get in on that move in price, that move in price action. That's what you want to do. Right there would be your entry, and then you get the big swift move. That's a directional move in price. That is what we are trying to capture when we are going to go ahead and take this first breakout strategy. So essentially what we want to do to execute this trade, we want to go to our current price bar. PB1 closes outside of the Bollinger Bands. It's a buy or it's a sell. All right, the stop loss is placed above or below PB1, which is our price bar 1, and we're going to take a profit at a fixed risk versus reward. Okay, that's easy. Now, there is a few things that we need to be aware of. And this is really what the trade would look like. You would have your price bar right here. There would be your breakout. You'll notice the Bollinger Bands typically open up, and you're going to go ahead and just run that thing up to your risk versus reward here, and your stop loss is going to be right beneath that price bar. On short time frames, this can be an extremely tight way to trade. So let's go ahead and get in here looking. I had a trader right when I first started doing these live streams. He was a fantastic trader, was also a craftsman, and was interested in trading this type of trading idea, this trading strategy. Was interested in doing it on the NASDAQ futures, which there's nothing really wrong with that. You just have to be aware that on a day like today, you're not really getting much of a move at all. So it's very difficult to sort of say, oh, I'm going to nail this type of breakout strategy. But essentially, what he was looking to do was he had it down, I believe, to a 1-minute chart, and was looking to catch breakouts on the 1 minute shortly after the U.S. Open. So it would be a situation right in here where, 7:03, so 7:30 would roll around, something like this. Boom, you'd be looking to take the first one that broke out. And like right there, that right there would have been your sell on the first bar that broke out sort of after your trading day started. You could see the potential here to get on big moves. Now, on the conversely, you could definitely be looking to maybe to take a trade right there and get the rally. So what happens right here, though? Now, you notice a couple of things. When you get into rotational markets, it's trouble. Like right here, you could have been tempted to sell this price bar and take the short looking for the big move down, and you ended up losing the trade. The beauty of it is it didn't cost you very much. So remember, the smaller the time frame you use this on, the greater the chance you have of getting stopped out a lot. But the chance that you have of maybe getting in on a big trade, maybe something like that, well, I mean, that's a pretty darn good move. Take a look at what we're talking about here just to sort of illustrate. And we're going to look for some live trades too. So I hate doing everything in retrospect, but it really does give you an idea of how this works. Right there would be the top of your stop loss, right above that price bar. Remember, you always pad that a few ticks, and then there's your move. Well, if right here's my entry on my close, you can see just how tight that is. I mean, that's relatively tight. 592, 23.8, 582. That's about 10 points, about 40 ticks, which is absolutely nothing. I mean, nothing for the E-mini NASDAQ. So the E-mini NASDAQ breaks out. You can see you probably hit your 1 to 3, 1 to 2, 1 to 3 right there. Is that a good trade? Yeah, it's a real good trade. The question is, where did you put your profit target stop loss? I had 1 to 3 on the video. I would probably 1 to 2 would be a challenge for me. 1 to 2 would probably be about as high as I went. But you can see right here on this short, let's say you were going to draw this short right from your entry, something like this. And I know we're looking at the absolute bottoms, but your risk versus reward, you just dial that right in, 3.5 to 1. It's extremely doable. Right there is 3 to 1. That's doable. All right, let's see if we can find one of these trades right here. So we've got a 1-minute chart setting up on the NASDAQ. Now, this is going to give us an opportunity, hopefully, here in 765. We need to see a break here. We're going to give this another minute or two and see if we can, in fact, get the breakout above that upper Bollinger Band. If we get a close above the upper Bollinger Band, we buy it. That's simple. Now, you see right there, you probably got stopped out. The key to making this type of strategy work is that you get into the market when the Bollinger Bands are wide open. So right here, I mean, we're doing something like this in real tight Bollinger Bands. It's going to be a challenge. We've got to wait for this thing to break, and when it breaks, then we buy, stop loss down, and then we're looking to get our runner. Is this the time of day to be doing this with U.S. equities? Pretty tough because you can see things definitely slowed down. But that would be how we would execute the trade. So I don't know. Let's go down to a real tight time frame. I usually get impatient with even 1 minute charts when we're doing this live. Let's go down to a 15-second. We've used that one in the past quite often. Okay, you can see really the same type of things happening on the 15-second chart. We're just getting eaten alive, going down low, and then rotating back up. I don't advise using a 15-second chart. We're just trying to illustrate, how to put a trade down using this type of strategy. Would I be excited about the prospects of this trade on a 15-second chart? Probably not. Probably not, but we definitely are looking here. We just have to get a trade. Is there anything moving right now? I mean, that's what we need, something that's moving. We might get it right here. It's got to be patient, guys. They pay us to wait. They don't pay us to trade. So we'd have a buy. We're going to go have a market order and a buy. Take profit. We're going to build all that on the go. We're going to build all that on the fly. I'm going to show you where to put your stops and your take profit. But something like this, I mean, we just need to get that bullish close right up above the upper Bollinger Band, and then we can go long. Essentially, that's what we're looking to do, just to execute a trade, just to execute one. That's all I want to do, to show you guys the mechanics of this. Can we get outside the Bollinger Bands? Now, it is a good exercise to sort of do this in real time. The mechanics of the trade are sort of secondary. Once you've done it once, you should be able to replicate it every time. But what's happening here, and what you're getting to watch, is the way that the Bollinger Bands track price. Okay, it's not that there's some magic number. It's not like it's magic, but it really does contain the majority of your price. Now, you're moving lower here. The market's moving lower. There's volatility in the market. But that lower Bollinger Band, that's sort of that reflection of our standard deviations. That's where it kicks in. You're only 1.9 standard deviations away from a norm. That means that we're not breaking out. We're not shattering our normal expectations. We are trading relatively normally compared to what we're thinking the market's going to do, what our indicator's telling us. Right now, we want to see a break. And essentially, that's why I should have called this a breakout strategy, because that's what it is. It's a breakout strategy. So right here, we're approaching our upper Bollinger Band. We just need to get a bullish close. Now, just like our 9 EMAs and our crossovers, I want it obvious. If we close right on our Bollinger Band, I'm not taking it. I want to see a close right up in here. We got to get right up above that thing, so I know I've got confirmation in my own mind that price is broken above that Bollinger Band. 15-second chart, once again, we're just doing this to get some good practice and execute a trade. Okay, now we're thinking we have a chance here. So I've got my buy order here. I've got my market order. I want a bullish close above that upper Bollinger Band. If we get it, then we're going to pull the trigger. And you can see right there, we have it. Okay, there it is. Bang. Are we there? All right, we're there. Boom, we're gone. Send order, we're long. Okay, we're officially long right there. Not a very good price action, but there. Where's my stop loss at? Quick, think. Where's my stop loss? Right there beneath my trigger bar. Okay, if I'm long from 23,604, let's say, 23,601. So if I'm going to go, let's say 1 to 2, where does price have to go for me to be successful? 7, it's got to get right up here, what, to 10? Something like that? 7, it's going to be 7 and 10. So let's go ahead and put it up there to 10. That's where we would get paid off. Now, are we in business or aren't we? It's very choppy. We're sort of that upper Bollinger Band, very stubborn. It's going to come down. It looks like it's going to nail our stop loss. Once it nails our loss, we're out. Okay, we're not quite nailed yet. Not quite nailed yet. All right, we're out. Get rid of it. Well, I mean, we're close. We're bouncing off of my stop loss, essentially. But we'll wait for it to penetrate where exactly we're going to get knocked out at. But here's the deal. We didn't break. Okay, bam, we're out. I'm done with that. What happened? Just cancel that. We're out. What happened? We broke out. We reversed and took ourselves out. 15-second chart. Stop loss, bang. But look where my profit target was. Now, this is why it's important that you think in terms of 1 to 2s, 1 to 3s on this type of strategy, because your winning percentage, admittedly, it's not going to be as high as some of the other things we do. With the 1-to-1s, with the macro Fibonacci levels, that's my bread and butter. That's what I work with. Something like this, you're going to be taking a lot of trades, especially if you're doing something like a 15-second chart. You're going to be taking a lot of trades, and you've got to stop yourself out when it comes time to do so. So let's go to a 1 minute. Let's see exactly where the 1 minute chart is. Okay, right here. This is going to give us maybe a better chance potentially to trade. You can see the market is wanting to move higher. There's no question about it. We would need to get our bullish close right there. Stop loss is going to be right beneath our trigger bar. That'd be great if we got another one right now. All right, let's go market. I'm going to go ahead and send them if we close above that upper Bollinger Band. Now, We want to see the market really break, and you're going to be shooting for something probably up in there. We want to see the market really break and prove itself above that upper Bollinger Band, that we're going to have a chance potentially to get that runner that pays us off at a 1 to 3 or a 1 to 4. Has it happening? Doesn't look like it's going to happen. Maybe. Let's see. 7, 6, 5, 4, 3, 2, 1. All right, no joy. So if I was going to do something like this for a strategy, is right now the best time to do it for U.S. equities? Let's trade. I'm trading a NASDAQ equity index. Is right now the best time to do it? Probably not. Mid-session. Okay, we're going through a mid-session sort of doldrums, sort of lunchtime on the East Coast. A lot of folks have kicked off for the afternoon. Playing breakouts this time of day, probably not the best idea. When would be a real good time to do it, though? How about during our orb? How about after that first 15 minutes of trade when the market is extremely active and our volumes are there? Potentially, that could be a great time to execute this type of strategy, especially if you're talking about a U.S. equities index. You want to be in there when the market is liquid and the market is really rocking and rolling, and that typically is early in the day. I would say probably the first 2 hours, 2.5 hours of the trading day, and then maybe again toward the close, towards power hour. There's nothing wrong with playing this type of strategy potentially going into the daily close. Well, I thought we had another trade right there. I don't think that we're going to get it. Well, I mean, see, that's what I mean. Bollinger Bands are dynamic. They're always moving. That close right there is right on the upper Bollinger Band. I'm not interested. I want to see it above the Bollinger Band. And the beauty of this is the market's starting to open up just a bit. You can see that this slope is starting to go positive for us. That means it's the trajectory of price actions going up. We'll have a chance maybe to get this trade on our terms, but it looks like it's going to take a few minutes to set up. So those are a few tips on the breakout strategy. That's the first way that you can trade the Bollinger Bands. It's the first way I showed you in the video. It's an interesting concept. I think it's touchy in that you have to know when to trade it and what to trade it. But, man, I mean, the rewards of catching these breaks and these swings are absolutely fantastic. Let me see. Small Yeezy, true, because I use them on my daily trading. There's nothing wrong with longer time frames on these Bollinger Bands. Like if you wanted to use them on a 30-minute chart, that's probably the best way to do it. It's just your risk is going to be a lot bigger. This is probably more designed for scalpers that want to keep their risk very, very tight. It's just on those short time frames. You saw how easily we got stopped out of that very, very simply, and look at what the market's done, on that 15-second chart. You need some range to work with. Very difficult if you don't have a range. All right, let's go through the second strategy, and then we'll go ahead and wrap this one up. I know that took a long time to really just show you how to trade this thing, but I'm still waiting for one more trade. I want that trade to close up above. All right, we'll give it 30 seconds and see if it comes to fruition. I would love to see this close right up in here. Then we take that bid, and then we start dialing in our risk versus reward on the fly. Maybe something like that. That'd be great. Doesn't look like we're going to get it. 13, 12, 11, 10. All right, we're out of there. Okay, this is the second strategy that I'm going to show you today, and that's reversion to the mean. Reversion to the mean is one of those strategies that works great on Forex because the Forex has a tendency not to move. Today, we saw a little bit of a move during that U.S. mid-session. A lot of times, that Forex will just even out, and when it trades sideways and the market doesn't move and it doesn't want to break, then you've got a pretty good chance to use the Bollinger Bands in one of the more powerful ways that you can use it, especially on the Forex charts. So I'm going to go ahead and show you this way too. We'll see if we can actually get one of these trades as well. Bollinger Band strategy number 2 is called reversion to the mean. Now, what reversion to the mean is it's a fancy way of saying, listen, the market's flat. We have an established range. We're going to sell the top. We're going to buy the bottom and play profitability back towards the center. That's it. That's what reversion to the mean means. It means that there's a mean value. That's the middle of our range. We're going to play any extension from that mean back towards the mean. Reversion to the mean. All right. Now, the goal is to cash in on rotational price action. We love a flat market here. It's a lot like that Piranha strategy that we went over the other day. Any time frame on any product, no problem at all. Trade it on any time frame, any product. But like I just showed you on that 15-second chart, the smaller time frame you get, the tougher it's going to be. To execute. Works best on slow range-bound markets, no question about it. Conservative risk versus reward. This is the one that I like. One-to-one strategy. We're looking to really develop a situation where we can get paid and then move on to the next trade. I like that. I like the ability to hit this one with a little bit of confidence, expecting to win, as opposed to the 1 to 3, 1 to 4s. We know we're not going to win as many. The 1 to 1s we can win. All right. And then you're wrong only once. Once the market breaks, we don't try to chase our money. We get out of the way. We get out of the way and let it break. We maybe even, instead of just taking a loss and waiting for the next trade, you maybe just turn around and play that breakout strategy right after the reversion. You can combine them and pretty much always be trading, and that's pretty much what we want. So this is what it looks like. A flat market is one where the Bollinger Bands are parallel and they're tight, relatively speaking, of course. Upper and lower Bollinger Bands have no slope. That means they're parallel to one another. That's absolutely key. That is absolutely key. You're going to want to remember that. When the market flattens out, the Bollinger Bands go parallel. And when they go parallel, you've got a chance to essentially sell the upper Bollinger Band and buy the lower Bollinger Band. Let's have a look. To execute, we identify an established range. Now, we have a minimum of 3 price bars. That means 3 price bars have to be inside of those parallel Bollinger Bands. It's that simple. We can't just have one price bar. We can't have a big volatile section that comes down into a bottleneck and then like on the first price bar, then we're trying to play rotation. We've got to let this range really set up. And honestly, the longer the range, the better off we're going to be. So a minimum of 3 price bars need to be inside of those parallel Bollinger Bands, or else you could easily get caught in a breakout or a reversal. Now, the idea is simple. Sell the upper extreme, buy the lower extreme. Sell the upper Bollinger Band, buy the lower Bollinger Band. And what are we going to do? We're going to set our take profit at a 1-to-1 risk versus reward ratio. And here you go. There's the 1-to-1. You can see we're going to sell the upper, buy the lower. Profit target's right in the middle. So the idea is potentially to be right a lot. Like right there, you'd be looking at 1, 2, 3. So right in there, probably selling. Boom, there's one profit. Then the buy is automatic right there. Boom, there's the buy. And then what happens? There's the sell. Those two are just absolutely beautiful trades. There's the sell. You come back down. You're probably going to sell again potentially here. But the deal is you lose that trade and you're out. You're out. You don't try to sell in to that really a wicked breakout. And what that does is that establishes you with 1, 2, 3 winning trades and 1 losing trade with a 1-to-1 risk versus reward ratio. That's 2 for 3. That's 66%. You only got to win 50. 66%. That's a 16% edge. And that, you find rotational positions like that or markets like that. It's just all about how much money you can trade. 16%. Think about that edge. 2 out of 3. You hit 2 out of 3. 16%, 50% break even, maybe just a little bit more than that to figure in for commissions. 16%. Every $100 you're trading, you make $16. Then it becomes just trade $10,000 a day, $20,000 a day. That's it. You never could get your hands on that kind of money. With the prop atmosphere now, you can. Something to think about. 1-to-1 risk versus reward right there. You can see this would be the trade. You'd be selling right there, take profit down in there, and you can see exactly how this works. Lots of trades, especially on the lower time frames. Okay, the number one thing that's going to make you successful, I've already given you sort of the risk versus reward stuff and all that jazz. You've got to find something that's in rotation, and you've got to find a time frame in a market that's going to give you a chance to succeed. Okay, you can see what's trending right here. Take a look at our breakout strategy right here for the Great Britain Pound USD, 30-minute chart. There's your buy, very, very close. Whew, pretty good trade. Even if this one was your buy right here, even if you waited and you got the buy there, you still got paid off. Interesting stuff. What we want is rotation right now. So what's flat? Dollar yen, that thing's been flat forever. Okay, that's a pretty good move on the 30-minute chart. This wouldn't be a candidate. Let's see, Australian dollar, US dollar. What else do we got? Okay, pretty good moves. US dollar, Swiss franc. Decent move. Swissy's a good one for this strategy just because it typically does not trend. How about a 4-hour chart? See, something like this would be the price action that you want. See the way that those Bollinger Bands sort of flatten out? Something like that. Bang. Right there, right there. And what I mean by the 3 price bars, you see the way that this comes together right here? The Bollinger Bands sort of come together and flatten out. I would be looking right here. I'd say, okay, we're flat. 1, 2, 3. And I'd be ready to rock and roll with this range, especially on a 4-hour. Definitely. So then you'd be looking to bid. There would be your bid. And it's beautiful because it's coming during the overnight. Not a tremendous amount of volume. Look, the volumes are relatively low. There would be your bid. There would be your sell. Panned out to be pretty good. This bid right here, you'd have got knocked out. and then the market opens up, and then maybe you could reset it, but you'll notice that the volatility starts to increase. You probably don't want to do that in this situation. So does this trade qualify? Would this trade qualify coming up for us on this Swissy? Well, you had a pretty good move here. You sort of saw the market open up. Your Bollinger Bands sort of opened up a little bit, which is fine. You come down and you sort of creep back into price action, but price is flat now. So even though the Bollinger Bands are sort of wide open still, you got a significant distance between them. I mean, what are we looking at right here? Upper Bollinger Band's going to be 80.92, and the bottom's going to be 80.02, so about 90 pips, something like that. So we've got a pretty good attack. So if I was going to make a play here, what would my trade be? Right there. So if we would do the schematics would look a lot like the Piranha. These would be limit orders. These wouldn't be market orders. My take profit and then my stop loss, you're going to be at a 1-to-1 ratio. So a couple ways to do this. Number one, you could be conservative with it. All right, you could say, okay, I'm going to buy O2s, something like this. Around that lower Bollinger Band. Okay, we're going to buy O2s. What are we thinking? Well, we know that our midpoint's right up here at about 48. So let's say I want to go for 25 pips. Maybe I just want half of that distance. Now I could certainly do that, or I could shoot for the whole enchilada right there and try to get that 25 pips, or excuse me, that 48 pips instead of 25. If I was interested in taking more money with less leverage, then I would do that. If I wanted to use more money and maybe try to get in and out of these trades a little bit quicker, less systemic risk, less exposure to the unknowns or economic events and things, then we could do maybe just 25. So let's go ahead and just do 25. I mean, I don't have a problem with it. So what would we do? We'd go 25 pips here, take profit right there, and then you'll go right there to pips, 25, something like that. Let's go ahead and buy it, put it in there, and that would be your trade. Why did we make the trade? According to the reversion to the mean strategy, right there you saw the Bollinger Bands open. We traded inside, and they are now parallel. Now, they're not extremely tight, but they are parallel. That's all I need. So what are we looking to do here? We're looking to buy the lower Bollinger Band and get rotation back up towards our profit target. The biggest thing you have to remember here is you need that risk versus reward to be right around 1-to-1. That's why this is probably I prefer to do this over the trend strategy, the breakout strategy. But something like this could be very, very good, especially as that market flattens out. What would we love? We would love just to see this thing tighten up, move sideways. We've really got no key events coming our way until tomorrow's GDP report. This would be a trade that we could get the next 16 hours, next 12 hours, 16 hours. So that would be a way that you could execute this rotational strategy. Something to think about there. All right, let's try one on an ultra short time frame. Let's go back to our U.S. equities because there is a little bit of movement here. Let's go to, say, I don't know, 1 minute chart and see what we've got. Okay, you wouldn't do that here. The rotational would not apply here. Why? Take a look at the bands. They're sloping. They're far apart. They're expanding. They're not parallel. As soon as they're expanding, you don't want any part of this. You don't want to do this. In fact, you're probably still broken out buying that breakout right there. So that right there, this situation with the Bollinger Bands would not qualify. Let's go for another one. Let's go. Let's look at gold. Gold 1 minute chart. Potentially, you could have taken a few in here. Personally, I think 1 minute's way too short, especially with spreads like you're seeing in this gold market. Would you be looking to trade reversion here? Absolutely not. Absolutely not. We're right up around 3,400. We talked about that level yesterday in gold. You don't want that. You don't play reversion here. You don't want to just sell into that upper Bollinger Band going against a trend. You don't want any part of that. So I would be very careful really trying to execute any type of reversion trade that you try to execute when the market's sloping and the market's breaking out. You're going to run into trouble. Almost guarantee it. Almost guarantee it. All right, let's see if we can find one more of these things. Euro USD typically is a rotational market. It is on the move today. We see the dollar index has definitely given back all of its gains from earlier in the session. This is more of what you want right here. Bollinger Bands are parallel. That's more of what you want. When we start to open up like this, I mean, they are still sort of parallel. I'm not really interested. I like that Swissy better. That would be probably a pretty good example. The Bollinger Bands are wide open, but they are sort of running parallel. I think you have a chance there maybe to catch a little bit of reversion off of this swing low right here, and then get back up in to sort of the middle of the guts of this range. All right, guys, that's a good look at Bollinger Bands. That really is the top to bottom on all things Bollies. If you have any questions at all, be sure to reach out. It's a strategy those two strategies are ones that I've used over the years. This is one that I didn't really talk about at all, but we could certainly natural gas. So this would be called a coastline trade. And maybe I'll do some videos on this because it's a lot easier than what we just went over. But what you got here, you go to a line chart, right? So now you have a Bollinger Bands, and you've got your line, right, your line chart. And what we're looking for here is just tests. We're looking for how many times we just get that peak right there and test. And you'll see right here, see how jagged that is? Sort of looks like a coastline. This is one that I was taught very early in my trading career. You can see that just you're looking for touches of that bottom line, and then you're looking to play breakouts. So you potentially, maybe you could call that a touch. That's a touch. And so like your third touch, just for instance. So something like this, it's not perfect. I don't know if that qualifies, but you'd say, okay, there's one touch, there's two touch, and then the third touch would play your break. Once again, I mean, it's going to be all about your time frame and your market. And if you can find, something that's sort of worthy of trading a coastline. But typically a coastline trade is based on the third touch, like a trend line, but we call this one a coastline. Maybe we'll talk about that in a Bollinger Band exclusive video. All right, everybody, I've gone on long enough, but those are two strategies that can get you up and going. I will leave the links to those videos not in the description, but in the comments beneath this webinar. So you can go through, if you missed the webinar, if you're just watching it, you can go through and click on those, and those will show you the complete videos that were made actually a few years back now over on Forex Signals. I love Bollinger Bands. They're one of my bread and butter. The indicators that I use, Bollinger Bands, 13-period EMA, and the Fibonacci retracements. That gives me pretty much everything I need. There's a few other secret sauce things that I use, but those are sort of in the private domain. Those aren't in the public domain. So probably going to have to keep it that way unless I'm going to get sued. All right, everybody. Yes, have a fantastic trading day. If you have any questions at all, be sure to tune back in and give me a ring over at howtotrade.com. Send me a private message, and I'll be sure to get back to you. As far as what we're looking at today, interesting day. Sort of choppy, whipsaw, a little bit of action. Business is picking up in the U.S. dollar. We're going to be back tomorrow with get you prepped and ready going into Labor Day and some expectations after the Labor Day weekend. Tomorrow's going to be more of a current event, news cycle type of a stream, and I think it's going to be a pretty good one because there are big-time fireworks going on in the Fed right now, and anything can happen in our markets. GDP is the key figure tomorrow. Be ready for GDP. And then we got core PCE on Friday, which is another market driver. All right, guys, that's a wrap. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.